So I want to talk about an important distinction between what's considered a large eligible employer and a small eligible employer as it relates to the employee retention credit. This distinction is super critical because it changes the types of wages that are considered qualified for the purposes of the employee retention credit, which can have a significant impact on the amount of the credit, which employees are considered eligible for the purpose of calculating the credit. And it's often something that's overlooked. Determining whether or not an employer is a small or large employer requires what's called an FTE, full-time equivalency analysis. I have a separate video on how to complete that analysis. We want to just touch on the difference of a large and small and the different types of wages that are considered qualified for the purposes of calculating the employee retention credit. So I always like to go back to what do the notices say. The specific circumstances on which wage payments are considered qualified wages depends in part on the number of full-time equivalent employees. So for the 2020 time period, if you claim the employee retention credit, the taxpayer claimed the employee retention credit, then a small eligible employer was an employer that in 2019, not 2020, in 2019 had fewer than 100 full-time equivalent employees. And then a large eligible employer was a taxpayer that had more than 100 employees in 2019. Again, so this is for the 2020 time period. And so the reason this is important is because if you're considered a large eligible employer, then the only wages that are considered qualified for the purpose of the employee retention credit is for the employees that were not providing services, right? So now the computation, the credit becomes much more nuanced because now the large employer has to demonstrate that the employee, that they were paying the employee gross wages, but that employee was not providing the services during that time period either because the employer was partially suspended or the business experienced a significant decrease in gross receipts. Now, in contrast, a small eligible employer does not have this restriction on which wages are considered qualified. So a small eligible employer, which for 2020 was an employer with fewer than 100 employees, full-time equivalent employees, qualified wages were wages paid to any employee during the period in which either the business had a full or partial suspension of operations of the government mandate or in which it experienced a significant decline in gross receipts. So this large and small employer difference is very important, and the full-time equivalency analysis is a critical part of determining whether or not you're a large or small employer. And it's oftentimes that analysis is oftentimes I see wasn't completed, or when it was misunderstood. So separate video on that, but key distinction in small versus large is more than 100 in 2020 in 2019, more than 100 qualified makes you a large eligible employer for the 2020 time period. And then in 2021, that number jumps up to 500. So it changes in the 2021 time period versus the 2020. Now, in all situations, you always go back to the number of full-time equivalency employees in 2019. And like I said, I have a separate video on how you complete that full-time equivalency test to determine whether or not you were considered whether or not you were considered a large or small employer during that time period.